Hello. Good morning, everyone. Um, we're just waiting for a few people to arrive. Um, so just by way of introduction, my name is Vishal. I am the founder and patriarch of the Valkin Group. We're a single family office based between New York, London, Singapore, Hong Kong. I'm a serial entrepreneur. I've built and sold four businesses. The last company was public listed on the Frankfurt Stock Exchange. I'm happy to be here this morning. I want to thank Jason for inviting me up here. I was listening to Dixon's speech before as well about family offices and support in Hong Kong. That was a wonderful session. Um, so we are basically looking at investment opportunities in Asia. My background is private equity, fashion, real estate. Those are the main verticals. So we've been involved with direct equity transactions, real estate, venture capital. We do a fair bit of VC fund investing, and we do a fair bit of direct investings through SPVs with other family offices, other VC funds, other LPs, other GPs. We love to collaborate. And I think in this day and age where we're living in the era of COVID, there seems to be more opportunity for collaboration than ever before. So I'm just here to talk about a few things in terms of I'm a first generation entrepreneur, first generation family office, and some of the growth opportunities for single families in the region and globally this year. So we see a lot of opportunity in the impact investing space as more and more people are paying attention to that specific sector. We love the idea of investing in businesses that have DNA fundamentally coded into their uh, business model. So this we see a lot of VCs and a lot of other family offices asking us about the way that we measure impact investing and investment opportunities. This is actually a number of ways. We look at the founding team, we look at the cash flow cycle, we look at their business model very closely and look at their production metrics. And this is usually in today's day, we have global production, global supply chain. Nothing is localized, everything is outsourced. So you can get the best in class from everywhere around the world. And this allows for equitable distribution of resources and wealth as well at the same time. So we are always looking for interesting conversations in that specific sector of impact investing. That can be in hardware, software, robotics, artificial intelligence. We're not restricted to any particular genre simply because we are a single family office and we don't have a specific investment mandate. So, unlike multifamily offices, where we also deal with quite a few multifamily offices, they may have specific mandates from the family. So, this is why we like to talk to families directly. Because they sort of set the tone in terms of the family office outlook, the VC investment outlook, and that filters all the way down. So, in terms of impact investing, the other area that we do love is cultural diversity, gender diversity in the company's DNA. So, we look very carefully at the founding team, the board. We look at um, the key executives, the senior management, and we love the idea for inclusion. Especially, we have a lot of startups coming up in Africa, in Asia, Southeast Asia, that we wouldn't have seen before, and more growth funds springing up all the time. So we talk to emerging managers, and we are looking to diversify our base as well to other cities where access to capital may not be as prevalent as it is in the US or UK or Europe or the Western world. So we also like the idea of giving first-time emerging fund managers an opportunity. Normally, in 5, 10 years ago, you'd normally look at a fund, and as a first-time fund, it's always hard raising money. So for the second, third fund where you've returned capital to investors, you've demonstrated an IRR, that is interesting from a single family perspective because you can see a track record. However, first-time managers who have a track record with another fund and they're managing a smaller pool of capital, $50, $100 million, it's easy, or it's relatively easier to return a better return for your investors with a small fund of 50 or $100 million as opposed to $1 billion or $5 billion. So we do see a lot of opportunities backing emerging investment managers and VC funds, especially if they're managing a small pool of capital. They have a track record, may not be with the same fund, but they have a pedigree. They know what they're doing. They're seasoned professionals. We love that. So, and by the way, while I'm speaking, if there are any questions among the audience, you can type it in the discussion box or the Q&A box. We do love to hear from family offices, and we do love to hear from partners and advisors as well as to what are the challenges they're facing these days in terms of capital distribution, in terms of capital allocation, in terms of sector instead of geography. So as a family office, we always look at diversifying our portfolio. So this can be in terms of geography, in terms of sector, in terms of growth stage. So there are a lot of metrics that we do look at. And I think in this year, the new normal still hasn't been established. I think it'll be another year, 2 years before we see supply chains come back to normal, or at least where capacity sort of keeps up with demand. I think these days, a hybrid work model where you're working from home and you work from the office, that's an interesting area that's set to grow. I know a lot of companies in our portfolio are looking to go to a hybrid model and never return to a work from office model because it is that much more productive. And also in terms of hiring, now you have a global talent pool, which is interesting. So you can have a base in Singapore or Hong Kong or London, and you can hire talent from around the world. So that is an opportunity. The other thing that we do look at when we do invest is the feasibility of the business model. So whether it's emerging managers or their portfolio companies or direct portfolio investments in terms of SPVs. As a family office, we are not a big fan of huge burn rates, and there has to be a sustainable business model at some point, as well as a liquidity event or a path to an exit. So, because we do believe, while we are patient, 5 years, 10 years is a fairly standard investment horizon for us. We're not short-term investors. But we do like to see the management team having put that thought process to work and have that expertise on the board. So when the time comes to pull the trigger, you would have that built into your business plan, into your data room, and that just becomes a natural next step. Because also in the area of wealth creation, as a founder who's done multiple exits, I can honestly say that it is not that simple as just pushing a button and doing a sale. This takes planning, it takes years. Sometimes it may happen overnight with an acquisition offer from a competitor or a partner, but more often than not, there has to be a thought process and steps towards executing that liquidity event. And we like business managers and investment managers, especially emerging fund managers, to have that experience as well with liquidity events. So even if it is a first-time fund, as long as they have demonstrated that they have helped their portfolio companies with an exit, that is a key factor for us when we look at investing. From a geographical standpoint, we don't hold ourselves to a single geography. We think finding talent where talent is available. In fact, we find sometimes in emerging markets where there isn't access to capital, you find better talent at better valuations, which is interesting. considering that in the West, in the US and Europe, you have a lot of capital available, and sometimes they're fighting for deals. And for the entrepreneur, it becomes a choice of selecting a term sheet. And that sort of becomes not a good signal because the valuations go higher and higher. And for us as a value investor, we look at finite PE multiples or finite revenue multiples when we come to making an investment decision. So where there is excess of capital, we find fighting for a deal isn't always the best way to go. We would rather look at a global landscape and pick a market where we get fair value and where the entrepreneur gets someone on their cap table or a fund gets an LP on their fund that brings some strategic value to them at a fair multiple, and we give them a shot at demonstrating that they have the potential to perform on a global stage, because that is what is available today in the day and age. So that we see as a high growth opportunity, especially now since we have literally with a laptop and a good internet connection, you can work from anywhere in the world. So we would like to see more investment opportunities from emerging markets. We do work with private banks, investment bankers as well when it comes to doing deal sourcing. I think in this day and age, we've got interesting conversations with other multifamily offices, other investment banks, even law firms that do bring something to the table in terms of deal sourcing, because the best deals aren't usually easy to access. But if you are an LP in a few funds, if you're a customer of a bank with a private wealth management division or a multifamily office, the value add that they do bring is in terms of deal sourcing. And it's also understanding what the family office is looking for, where they bring us relevant deals. So our mandate typically these days is supply chain, import finance, export finance, hardware, consumer goods. We do fintech investing. So somebody coming and pitching a real estate project doesn't really work because it's not in our mandate at the moment. That's not what we're looking for. We're looking at tech investments. We're looking at emerging managers and fintech funds. So that is where some value addition can be created in your ecosystem. If you look around, the people that you surround yourself with, in terms of your advisors, your investment bankers, your private wealth managers, your lawyers, your tax advisors, all of these people bring something interesting to the table for a family office. And it's not just managing the wealth or generating a steady return or a cookie cutter bond program. If they can offer impact investing angles, impact investing opportunities where you can actually make a difference, especially if you're a family office from a first generation family office entrepreneur, it's a virtuous cycle. I like supporting founders and entrepreneurs where I can with non-dilutive capital in terms of venture debt or line of credit, so much so that we made it a priority in the last year, 2 years, to support founders and entrepreneurs with that sort of capital that is non-dilutive, where even with funds, we look at co-investing with them on an SPV level. And that is a high growth opportunity as well, because doing co-investments outside the fund adds color and a bit more of a deal-making skill to the VC fund and its portfolio companies, because you're adding value in terms of providing your portfolio companies with more capital without necessarily diluting them or waiting for the next round to open. And it also gives us a chance to work with the founders one-on-one in terms of managing expectations, or a little bit of help with the board governance in terms of growth capital, their future capital needs, in terms of valuations, in terms of wherever we can bring value. That's what we like to invest. Especially in the fashion sector, which is my background, it is an immensely interesting landscape where fashion is the second most polluting industry in the world after coal and oil. the world of fast fashion is simply ridiculous, where you can buy a dress one time and discard it for $8, $10. Um, so we do like to see quality, or if it is fast fashion, if there's a social element to it, then that's fine. Um, However, we're mindful that when we do impact investing, you look at several metrics in terms of environmental, socioeconomic, gender diversity. So it's not just one metric that we look at when we do impact investing. Um, so we wouldn't, for example, invest in a company that is uh, that has a great model, a business model, but is hugely damaging to the environment, or if it ticks all the boxes in terms of gender diversity, socioeconomic, but it again has an environmental impact that we are not comfortable with. Similarly, we don't do certain industries like tobacco, firearms. These are just not, for a typical family office that has not made their money or the family's money in that area. It's an area we'd prefer not to go into. So we are looking at the next stage of artificial intelligence, the metaverse. We're looking at blockchain very carefully, not necessarily crypto, but blockchain itself, the applications. Um, and we are always excited about supporting funds and entrepreneurs that have a clear path and a business model. So we think that productivity is going to go up in a big way in the coming year, 2 years, especially now with 5G being launched and 6G on the horizon in another 10 years. That is going to magnify internet connectivity 50-fold, another 100-fold. That is where, so we think of it this way, as the infrastructure is being built now, but in the next 10 years, it'll become ubiquitous. So where the price of a semiconductor drops down to a penny. So we'd like to be involved with founders and funds that are on the cutting edge of applications that would be used for the next 10, 20, 30 years. But we're completely mindful of the fact that technology changes so fast that what we invest in today may not be applicable in the next 5 years or 10 years. We're especially excited about AI and robotics in medical technology, because I do believe healthcare, universal healthcare, is a basic human right. And that, in terms of impact investing, is an interesting area for us to look at, where you can reduce the cost of healthcare, especially in countries where it is capital intensive, where it is capitalistic, or where it is not a social birthright to its citizens. There are a lot of emerging markets that do not have universal healthcare, for example. And we think that that's just a basic human right. And with technology, we can solve that in terms of lowering the cost, even targeted DNA therapeutics, robotic surgery. As you increase productivity and the cost goes down, more and more people have access to a higher standard of living. And that's something that, as a family office, we would always like to be a part of, because we do believe that as we do better investments that are socially and culturally mindful, that has a bottom line effect, both top line and bottom line. So again, if you have any questions, feel free to let me know. We are always available to talk with funds, investment bankers, directly with founders, as the case may be. Especially these days, we are looking at a close relationship, more so than ever, with the private banks and the investment advisors in terms of guiding us to co-investment opportunities with other families, and vice versa, because we do believe that as a family office, we host family office dinners, and we talk to other family offices all the time. It is a virtuous circle where we have a deal that we may or may not invest in, but we do pass it along to people that would benefit. So, for example, we don't do a lot of investment in biotech or stuff which has a long tail in terms of R&D and production. So we prefer to leave that to families that have made their money or have expertise in that area. So we would like to see more collaboration with diverse families as well, because we do believe that everybody brings something different to the table. And for any investment to thrive, the more diversity that you can bring to the cap table, to the LP, GP, the fund structure, in terms of geography, diversity, expertise, that's always beneficial. And I'm always happy to talk to other country ambassadors and other government institutions that are there to foster impact investing and family office investing, because we do believe that government has a part to play in terms of setting the backbone and setting the landscape and even the tone of where family offices would like to invest by providing incentives or government support. In terms, it doesn't have to be monetary. It can be, administrative, or it can be in terms of diplomacy or in terms of policy making. So, for example, I was just listening to Dixon speak on the previous panel in terms of infrastructure as to how fast you can set up a family office, how quickly you can diversify your portfolio, how quickly you can deploy capital, how quickly you can set up SPVs, get through the paperwork, the legals, the due diligence. That all plays a part. I know that we've looked at setting up a family office division in certain countries, and it's just, there's a lot of red tape in terms of setting up, in terms of governance, in terms of even as simple as visas for employees and staff. That is something that if you need to bring talent in from overseas, having a difficult regulatory environment in terms of visas and work visas it is an obstacle where you can't bring in the best of the world to the city that you need to bring that expertise to bear on that market. So we would like to see more discussions with government bodies to that end as well, and in terms of associations with family office and venture capital associations. I know the Singapore Venture Capital Private Equity Association has quite a robust event management program. They've got seminars, they've got a lot of networking events that you can attend digitally, educational seminars that are hugely useful for first generation families and multi-families that are expanding to a new region. So we would like to see a lot of more discussions. A few of the high growth opportunities that we see in this coming year will be also in interconnectivity of information and data and highways. So in the past 5-10 years, where you'd be working remotely from a certain geography, your visibility in terms of global supply chain and global data would be limited to on a need to know basis. But as the internet connectivity goes up and more people get accustomed to working from even decentralized, a single office can have 50 people working from various parts of the country or the world. I think there's a huge opportunity there for productivity to go up. And I think this has a lot of benefits in terms of opportunities for those who are less fortunate in developing markets, who are still on the same time zone, but they have the skills. And now they can join a world-class organization working from their living room, as long as they can perform and they can do the job and deliver. I think that's a huge opportunity in the coming years. And I hope that that becomes the norm for decentralized working, as well as a shorter work week, because I think it leads to the employees having a better mental outlook and a family work balance. So to sum that up, I mean, we're always happy to have conversations, and we're always looking for high growth opportunities in terms of funds and direct investments. We prefer to invest in developed markets, but we have an open mind when it comes to emerging markets, as long as they have a global outlook. We prefer direct investments over fund investments. We do like to get to know the LPs, the GPs, before we do commit to a 5-10 year fund. And then we do capital allocations on a yearly basis when we have liquidity events. We just stick that money in an ETF until they do a capital call, the money's on call. So we would like to also take more time getting to know founders and emerging managers that may not be fundraising today, but they have plans to in the future. So we would like to hear from them and have a discussion with them as to where and when they would like to start. Because no matter what they say, or no matter what anyone says, nobody writes a check on day one. Typically, you have to get to know them, track their progress, build a relationship before you actually pull out your checkbook and write a big check or allocate capital. Again, maybe because I'm a first generation family office and I'm an entrepreneur, not managing multiple families' money, we have a different outlook, because when we do investments, it is for the long term. So to sum that up, I'm always happy to have a discussion. You can connect with me on LinkedIn or through our website. Happy to drop that into the chat box here. And I look forward to catching up with everybody. And I want to thank Jason again for inviting us. And I look forward to speaking at the next event. Thank you very much.